Hello everyone, we are here again to discuss about the recent geopolitical issues that is persisting and its impact on oil and gold. Now before I start, let me just request you again to please subscribe and hit the bell icon for various commodities and currency market updates ongoing. Now let's start. What the current geopolitical issues persisting that we will discuss here. Let me show you the first slide. The first slide indicates the history of the geopolitical issues that is persisting between Israel and the Palestine. Currently, what we have seen that this conflict is more than 100 years old. What we have seen is like it started before the World War I, where the UN has recognized Palestine, and after that there has been conflict between the Arabs and the Jews. This conflict is ongoing since the World War I, where there have been other countries also being involved like Jordan, Syria, Lebanon, as well as Egypt. Only thing is the recognition of the territories involved as well as recognition of the Arabs and Jews territories has led to a long persisting conflict in the same. All the histories have been shown here, like various years there have been attacks, there have been retaliatory attacks, and that is also going on. Now currently what we have seen is Hamas, that is the militant organization which has been considered as a militant by Western world, has recently carried out attacks on Israel and held some hostages. Because of that, the geopolitical issues have escalated and other countries being also involved in that. So what is the impact of these in oil and gold prices? Now let's see the history of oil. The history of oil shows that after the establishment of OPEC in the 1960s, prices were relatively stable till the 1970s era. But various geopolitical issues like the Arab oil embargo, as well as the Iranian revolution, as well as the Gulf War, which happened in 1991, that has led to spikes in the oil prices historically, as well as the inflationary regimes. Because of that, where the geopolitical issues have always been supportive for the oil prices so far. Now coming to the next slide, because of the spikes in oil prices, the inflationary regime has always persisted, where we have seen the spikes in the inflation also globally. What we are seeing in the charts also, since the World War I, there have been spikes in the inflation during the war events. Historically also, if we correlate the current inflationary scenario from 2019 onwards, we see that the current inflationary scenario is very much correlated to the 1970s scenario, where the inflation wave is now at a bottom level and may again start to rise in the coming years, maybe for the next decade. Now this is just a historical correlation where we are just estimating that inflation may be persisting and may remain sticky in the medium to long term scenario. Coming to the next slide, what we see is like the key triggers which are there for the oil and gold markets for this quarter. For first speaking about the oil, the key triggers are the supply deficit, which is persisting right now because of the supply cuts have been given by Russia and Saudi Arabia in the last quarter, that may tighten the market. The global oil inventories are at 6-year lows. We are seeing that US has recently announced the purchase of the strategic petroleum reserves to refill its reserves. Because of the low persisting scenario, the summer oil demand have been quite good in the US. China is also having a high refining rate despite the slowdown in the economy. So oil demand is pretty well supported right now, and deficit concerns are still persisting, which may be a supportive factor for oil prices. Coming to gold. Gold is always considered a safe haven asset, and what we are seeing is currently the geopolitical scenario is also gold has risen by more than $100. The other factors are also involved, like the festive and peak wedding season demand starting in India, that is also supporting the sentiments. Now coming to the next slide, what we are seeing is like the factors which may impact the gold prices and what the safe haven appeal would drive the gold prices. Now coming to the last part, that what we expect in the gold as well as in the oil prices. One thing is to note that despite the rising long-term yields as well as safe haven dollar being supportive, the gold is still expected to outperform other commodities in this year. The major reasons being the volatility which is persisting due to the safe haven demand, as well as the slowdown expectation beyond this quarter due to the higher multi-decade interest rates. we have seen that whenever the inverted yield curve which I have shown in the chart, that is in the negative territory, which is also also showing that there will be some slowdown concerns going ahead, and that is currently bottoming out in the current quarter. This may lead to expectations that the slowdown may happen and the interest rate cuts may happen in the coming quarters. Now, coming to the last part is what we expect in the oil and gold prices in the current quarter. Gold prices are expected to remain volatile, where we expect that these prices may see a new all-time high this year going ahead in the coming months. We can again expect that gold to test above $2,080 per barrel per ounce levels, as well as we can again see up to $2,200 per ounce levels in the current quarter, or maybe by the next quarter onwards. As far as oil is concerned, oil is also looking very supportive right now, and may lead to inflationary concerns also. But oil, because of the geopolitical scenario, what we can see is like it can again test $100 per barrel levels also in the near term, but expected to remain volatile. So this is all about our updates on gold and oil prices. And lastly, I would like to thank you all of you to going through our updates. Thank you very much. God bless you and have a great day.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.